economic impact of real estate, like the backbone of our society, and really like it flows downhill. And
hey everybody, welcome to another episode of the Renown Mortgage Podcast. Soon to add the amazing Clear to Close podcast, which would be really, really exciting. We're super stoked about that. But for right now, I am Sean Walker.
And I'm Justice Roberts, and I got to tell you, I'm super excited about our new podcast that's coming up, Clear to Close. You're going to want to tune in.
It's going to be fun. And listen, we are deep into 2026 right now by 2 weeks. So, but a lot has gone on already. I mean, it is wild. So, I mean, I thought, Justice, we would jump right in. Big announcement this week. Trump telling the Fed, hey, listen, I want you to invest $2 billion into the markets here. What does that look like for the mortgage industry? What can you tell us, just even as this has gotten, we're at the genesis of this, so we have no idea what the impact's going to be right away, but what are we seeing? What are we thinking?
Yeah, I mean, the directive was to have Fannie Mae and Freddie Mac come in and buy mortgage-backed securities, and when we see this happen, it has a direct correlation to what interest rates. Interest rates respond relatively immediately. It was kind of the market jumped at the news and kind of pulled some things back. But what's really interesting is that this likely isn't the first time this is or the last time that this is gonna happen.
Right.
Likely, we're gonna see some further announcements and further direction. I guess the understanding of the market, or if I want the listener to understand, so pay attention, is interest rates are going to come down one way or another. They're going to come down. We've got to buy mortgage-backed securities. If that's going to be coming from Fannie, Freddie, obviously we have other adjustments that could come from the Fed, and seeing the Fed funds rate come down. But like one way or another, 2026 interest rates are going to come down. Yeah,
this is a big deal. This is not. We've heard, hey, Fed meeting is going to happen, CPI, all of these things that a lot of the expectation that was getting hyped up that we would see out there on social media and on the wires was, hey, a big rate's going to come, not realizing most of those were already baked in. This cake was not baked. This cake, the batter wasn't even made. So this is not baked in. There's going to be an actual impact here. What the measurement of that's going to be, only time will tell. But obviously what that is signaling is the federal government is saying we want to see some stimulation in this area, that we need to see some growth. Housing starts are down. They're down 4.6%. That's a notable number. And so we're wanting to see that number of home ownership in the United States start to move up. And so the government's seeming to say, hey, we're going to kind of put our thumb on the scale a little bit in that area. So, great information there.
I think what can't be understated is the economic impact of real estate, like the backbone of our society, 100%. And really like it flows downhill. And if real estate is slow, that's going to be slow economically for the rest of the country. So, a focus here and a support here is a support for the rest of the economy.
100%. Okay, well, hey, we're ready to dive in a little bit here. I came up with a couple of questions for you this week that I thought would be really good, January starters. What's the mindset? What's our mentality of our buyer right now? What are you seeing? So, what are buyers doing differently right now compared to 6 months ago? Not what they're saying, but more how are they acting? How are they behaving as as the gun has gone off for January and we're moving into this season?
What I've specifically noticed is the buyers that I'm having conversations with that are coming in, we're having an initial conversation, they're applying, we're going and taking those steps, they're a lot more decisive. And I think in the face of where interest rates are at, where the market and the noise of everything, the conversations that I'm having, the tone is a little different. It's like, here's what we're going to do. And I'm submitting an offer tomorrow. And I'm done waiting. It's a lot more decisive, and it's less like me being a coach and advising. Not that is not a part of the picture at all, and definitely wanting to go, hey, Justice, what are your thoughts? But it's way more like, hey, I don't know if it's hold my beer, but like let me show you what I'm gonna go do, and like I'm gonna go act in this market. A lot more decisiveness.
I got a good night's sleep, and here we go. Right. So
Exactly. That's a good way to put it.
So, what are you seeing, like in some areas, are you seeing as far as expectations breaking down, especially in today's market, buyers or sellers, or even the agents? Where do you think that's happening? Like the expectations just aren't maybe being met right now?
I'd say for buyers in general, or anyone that I'm really having a conversation, it's coming down to monthly payment, that where people's expectations are, even with the understanding in their head, they go, I know interest rates are higher, I know home prices are where they are, but how that quantifies to a monthly payment, I think, is hard for people to understand. They're paying $2,500 or $3,500 a month in rent, and they're thinking that, like, hey, I can go get a $600,000 house and my payment's going to be $3,000. And it's like, no, the math doesn't add up that way. And it's not that we're doing. There's no smoke and mirror with the numbers as it comes down to interest rate and loan amortization. Like the payments just are what they are. And I'd say that's where the expectation maybe needs a little bit of resetting at times. And I'd say pretty consistently, it's like, okay, and the more educated buyers, I think, are knowing that, like, hey, I don't really know how this adds up. Can you break this down for me? And then, oh, okay, I can rationalize. I can make that work. Or, oh, shoot, like, I need to really reset my expectations from a purchase price perspective, because I was okay with $4,000, but you're telling me for the house I want, it's going to be $4,800 or $5,000 a month. Right. That's what kind of needs to adjust, and I think happens with time.
I would say that that's the difference too. And I don't like to knock anything, but I do like to always point out that that's the difference between having an expert loan advisor as opposed to, hey, I just submitted my app on some website and I'm hoping I'm going to get some good stuff back. But actually having somebody that once you've submitted all of your information, we have a great website, but once you've submitted that information, you're doing that with an expert loan advisor who's walking alongside you saying, listen, we're going to talk about every part of this process, and payment expectation rates, buy downs, things like that are going to be a part of that conversation, so that you are having a realistic and non-surprise experience, throughout this entire thing. Now, there's always surprises. Sometimes you can never expect the unexpected, but that's one of the things about having an expert loan advisor walk with you through that. They've seen a lot of those landmines before. They've seen a lot of those challenges. And so I think you would agree that that's probably one of the best parts of saying it's better to do this with somebody who really knows what they're doing, rather than just, I think I'll throw some information out there and see what comes back.
I couldn't agree more. I think that it goes in the conversation that I've had with many clients, is like, there are things that we can't control, low appraisals and, other elements, but there's a whole heck of a lot that we can control. And a huge part of that is understanding the different details of your loan and structure, and actually looking at understanding at the numbers and plugging that into your budget before you're under contract on a house. It's not like, hey, congratulations, and the lucky number is whatever the payments are going to be, or cash out at close, or cash at closing that's due. All those conversations are looking at properties, especially if we're running quarterback and clients are taking our lead on things.
Right. No, preparation, can't beat it. Can't, it's getting prepared up front is one of the best things. So, well, as always, if you are looking for any more information when it comes to your particular transaction, when you're stepping out and wanting to dream and taking that next step, whether you're looking at investments or anything like that, please don't hesitate to reach out. If you liked this, please like, share, subscribe, all the good things, because we are here every single week, and we are excited to begin to bring you Clear to Close, where we're going to just begin to start featuring amazing players in the real estate space who are the movers and shakers and are helping people change their lives. So we're excited for that. So for today, that's all we got for now. My name is Sean Walker.
My name is Justice Roberts.
And we will see you next time.